Hello, welcome to Fundamentals in Accountancy, Business and Management 2. Now let's start to work on our activity 7. This is again the continuation of the cash flow. Okay, so start. Okay, here is the problem. Prepare the journal entries, ledger, trial balance, statement of financial position, and until we solve the statement of cash flow. Okay, so now let's do it one by one. Invested 500,000 for his trading business. So debit cash 500, credit equity as a part of the owner's contribution. Okay, so that's a cash investment. Next, book it, bought equipment for cash 150,000. So the company acquired equipment for cash. So that's again another cash transactions. Take note of the cash transactions because we will be preparing a statement of cash flow. Then borrowed 2 million at the bank. Okay, so when we borrow money, we receive cash loan proceeds. So debit cash as part of the loan, debit credit payable or loan payable to the bank 2 million. Next we have okay, invested. Oh, where are we now? I think we are in number 4. Ayan. Paid utilities. Okay, we're done with that. Paid utilities or Meralco bill, 5,000. So, debit expense account. Okay, that's an expense account. So, we debit it. And that is again a cash transaction of disbursement of cash. So, credit cash. Then we have withdrew 10K for his personal needs. So, that's a drawing account. So, debit drawing because that's the normal balance of drawing. And credit cash again. So, more on cash transactions because I want to show you the the difference between the direct and indirect approach. I think we're doing here for the direct approach cash flow statement. Next we have here received cash sales 3 million. So debit cash 3 million and credit sales 3 million because sales is a credit normal balance. Again, that is a cash transaction. But here, purchase merchandise 70,000, paid half, and the other half on account. So debit purchases, because this is a periodic inventory system, we debit purchases for 70,000 and we disburse the half 35, but we recognize the accounts payable for 35,000. Next, we have paid half of the bank loan. They tell us to ignore first the interest. Okay, so loans payable 1 million, we debit it because we decrease our loans by debiting. The normal balance of loan payable is right credit. To reduce your payables, what do you do again? Yes, you do a debit. So debit loans payable and credit cash because you disbursed cash when you paid the bank. Next, we have adjusting entry of 10,000 for the merchandise inventory. Okay. Then here is the ledger. I think you already mastered how to prepare your ledger. These are the transaction number, and these are the corresponding number is the transaction value. Okay, so the cash account has a new balance of 4,300,000. Take note, the beginning balance of cash is 500,000. Okay, then the loans payable is now 1 million because he paid a half of it, half of the loan. Then the ledger balance, and then we can now prepare the trial balance. So the trial balance shows us the debit column and the credit column. Okay, next we have okay, so we can now prepare the income statement or the comprehensive income Purchases less the ending inventory will give us a cost of goods sold of 60 and a gross profit of 2,940 minus the expense of 5,000. So we have a net income of 2,935. Then now we can now prepare the financial position, statement of financial position or the balance sheet. So we have here the cash, merchandise inventory, and the equipment account. Okay, then the liabilities section and the total liabilities and equity account. From there, we can now prepare our cash flow. So, because the transactions are more or less cash transactions, it would be easier. But I think there is a purchase also on account. Okay, so we record what is again the operating activity? Yes, we record accounts that are what's this major major account major account in the operation, which is trading. So we have to include all transactions pertaining to the trading activities. So here, what are your activities in trading? First is your sales. Okay, so cash sales of 3 million. Then when you purchase merchandise, okay, 35,000, you paid the other half of 35,000, and you paid your Meralco bill of 5,000. So your net cash from operating activity is 2,960. Then the investing activity, again, what's an investing activity? Yes, it is the investing activity is concerned with the purchase and sale of non-current asset to facilitate your business. Okay, like in this case, the company purchased equipment. Okay, so when he purchased equipment, that must be a deduction to your cash. And then we have also here the financing activity. Again, what is the component or what are the components of the financing activities? This includes the changes in your equity account and the borrowings from your to your creditor, loan borrowings to your creditors. So here we have cash loan proceeds of 2 million and the withdrawal of 10,000 and the payment of one half of the loan of 1 million. So net cash from financing of 990,000. So then the net cash of all the three activities from operations, financing, and investing, we have 3,800,000 plus the cash balance beginning. Remember, I told you to take note of the cash balance beginning is 500,000. If this is not given, if cash balance is not given, but you know the cash balance at the end, which is 4,300,000, we just deduct 4,300,000 to your net cash, then you get the cash balance beginning. Okay, congratulations! Did you get the right answer? I hope so because this is one of the easiest question because we are only using the direct method. Okay, for the following day, we will also be using the what's this? The indirect approach. Okay, thank you so much and God bless everyone. Again, this is at your service, ABM with Teacher John.